Good morning to Dr. Yi Lin and all my fellow friends. Today, our group is going to present about our clothing manufacturing business. My name is Kang Ning, and I will start with the introduction of our company. Our company is known as Uniclo Berhad, and we will produce affordable and high-quality clothes such as dress shirts, jumpsuits, and the cardigans. The clothes will be sold mainly through online platforms like Shopee and also Lazada. There are a few reasons why we think our business is viable in Malaysia's current economic environment. First, the clothes is an essential need with a stable demand among Malaysians, and they are all price sensitive, so they will prefer more affordable clothes that is locally manufactured. Next, Malaysia has a well-developed textile and garment manufacturing industry. The skilled labor and local suppliers are available. This reduce the reliance on import and reduce the cost of production. Lastly, the e-commerce platform and digital payment systems are rapidly expanding in Malaysia. This makes us to get access to more customers in a low operational cost. In conclusion, our clothing manufacturing thus shows a high potential on long-term growth and sustainable in Malaysia. Now I will move to the importance of managerial accounting activity to our business. First, in the planning and decision-making stage, the managerial accounting provides information about the production cost, sales prediction, and also the pricing strategies. This lets us know what is the type and the number of clothes we need to manufacture, and also know the price that we have to set that is affordable to our potential customers, while at the same time still generating profit to our business. Next, the managerial accounting can assist our company in directing and controlling activities by comparing between the budgeted and also the actual cost. So our management can ensure the cost of the labor hours and electricity not exceed to make sure to minimize the wastage and control our production costs. Next, the production targets and performance bonuses based on the manager accounting can motivate our managers and employees to work efficiently. For example, the factory workers can be incentivized to work toward the production targets and continue to work towards the company goals. The fourth objective is the managerial accounting measures our business performance by analyzing the production efficiency, sales result, and also the cost control. By this, we can know whether the production department meets the sales target and whether the sales channels perform well, and we also can know about the improvement areas within our business. The last importance is managerial accounting assess our business competitive position by analyzing its competitors, target customers, and business risks. The cost and profitability analysis help us to determine the competitors and local clothing brands like Padini and FOS. Whether the customer demand analysis help us to know our target customers are young adults and middle-income Malaysian. The managerial accounting help us to determine the potential business risks like rising of raw materials price and the changing of fashion trends. Therefore, managerial accounting is important for our business to continue growth in economic environment in Malaysia. That's all from me. Now I will pass it to Nikki to continue her presentation.
Hi, I'm Nikki, and now I'm going to present question 3, initial capital requirements and funding needs. To begin operations, Uniclo Berhad need an initial capital of 40,000 ringgit as a new clothing manufacturing SME. This comprises cash of 20,000 ringgit and a second-hand OWM worth 20,000 ringgit. The cash will be utilized to hire production equipment, buying raw materials like fabric, and indirect material like threads and buttons. This also includes the initial salaries, electricity, and other miscellaneous costs until the sales start to earn enough cash inflow. The support of operation is facilitated by the use of the 20,000 ringgit when that helps in transporting and delivering the goods. This initial capital is sufficient and fair enough to run the business at the initial stage. And as the business moves forward, sales revenue will cover the future expenses.
Hello everyone, my name is Ting Delway, and today I will be talking about the budgetary process of business. What is participative budget? Participative budgeting is a budgeting method where employees at different levels are involved in preparing the budget. We choose participative budgeting because production workers and sales staff have better knowledge of daily operations. Their experience helps management estimate costs, production levels, and sales forecast more accurately, which makes the budget more realistic. This approach also brings several benefits. It encourages teamwork and shared responsibility because employees feel involved in decision-making. At the same time, it increases motivation and commitment, as employees are more willing to achieve targets they help set. In addition, participative budgeting improves the accuracy of sales, production, and cost budgets, which is very important for business planning. Participative budgeting is suitable for SMEs because SMEs usually have fewer employees and simpler management structure. This makes it easier for employees at different levels to communicate and share information. Overall, participating budgeting is suitable for small and medium-sized enterprises like Uniclo because it helps improve budget accuracy while motivating employees and supporting business growth.
Thank you, Dewey. Next, I will talk about the application of big data analytics in budgeted planning. When applying participative budgeting in our company, the big data analytics facilitate the estimation made by managers by offering objective insight in the market. In the closed sector, big data enhance the accuracy of sales budget by examining social media trends, influencer interaction, and reviews of customers. The sales team can identify popular clothing style in the market, and it helps forecast sales volume more accurately. For example, sales teams can increase budgeted cardigan sales unit when big data analytics shows a sharp increase in influencer engagement and online searches for a specific cardigan style. This precision is then directly transferred to the production budget. The big data enhance the production budget planning by collecting real-time data from Internet of Things-driven sewing machines and measure actual production time for different clothing types. As an example, the Internet of Things-driven sewing machine provide data that give accurate information on the duration it takes to create a complex jumpsuit as compared to a regular dress shirt. Furthermore, big data helps to reduce budgetary slack by providing a benchmark for material usage and labor time. For instance, when a manager of production says that they require 2 meters of fabric to make a shirt, the information provided by Internet of Things cutting machines indicates that the average is 1.8 meters. As a result, the budget staff can identify pattern and inefficient budget estimates. In addition, in the direct material budget, big data analytics can track global fabric prices. This will enable the procurement managers to adjust purchasing plan. Therefore, it helps to reduce material costs through better timing and sourcing. Lastly, such integration will enable our business to shift to a continuous budget. Big data analytics will automatically assemble real financial performance. As a result, managers can examine live dashboards display and detect past overspending or underperformance early. In conclusion, big data analytics allows our company to utilize the resources and act fast to the market demand changes. That's all from me.
Thank you, Siew Yu. Now Nikki and I will be sharing the preparation of the master budget. As you can see in our sales budget, we're projecting a total sales of 1.03 million ringgit with steady growth from the first quarter through the fourth quarter. Jumpsuits lead revenue at 357,700 ringgit, followed by cardigans and dress shirts. The highlighted figures is part of a year-end clearance strategy to move inventory and make room for new lines. We're clearing year-end inventory while maintaining strong average selling prices earlier in this year to maximize revenue. To support these sales, our production plan is both proactive and lean. We start storing in the first quarter, producing 4,910 units, our highest quarterly output. We do this because we're building a 20% inventory buffer for our second quarter sales. This front-loaded approach ensures we're never caught short. As we move through the year, production stabilizes, closely matching sales forecast. We will produce 7,800 dress shirts, 5,670 jumpsuits, and 4,550 cardigans in total, a total of 18,020 production units. Now let's look at our material cost. Total direct material spending is budgeted at 340,358 ringgit. The standout here is jumpsuit fabric, which alone accounts for 139,296 ringgit, which is 41% of our total material budget. Each jumpsuit requires 3 meters of fabric at 8 ringgit per meter. Dress shirts and cardigans use 2 meters each, but cardigan fabric costs 13 ringgit per meter, making it our second largest material expenses. Managing fabric consumption, especially for jumpsuits, will be critical to controlling our cost of goods sold. Separately, our direct labor cost tells a different but equally important story. Total labor expense is budgeted at 177,600 ringgit. Here, cardigans are the focus. They require 1.5 hours of skilled labor per unit, totaling 81,900 ringgit, or 46% of our labor budget. Jumpsuits and dress shirts require less time per unit, but jumpsuits still represents a significant portion due to the higher production volume. Labor efficiency, especially in cardigan production, will be a key performance indicator this year. Our production overhead is 237,977 ringgit 60 cents for the year. It's divided into variable costs like indirect materials tied to labor hours and fixed costs like rent and salaries at 31,000 ringgit per quarter. After removing depreciation, 233,977 ringgit and 60 cents in cash will be needed to run the factory. In our selling, general and administrative budget of 173,075 ringgit 80 cents. includes sales commissions, advertising, and administrative salaries. Notably, we have allocated 10,300 ringgit for targeted promotions in the first quarter and fourth quarter due to new brand introduction and clearance stock. These are strategic investments in our sales capability and operational infrastructure.
Hi, I'm Nikki again. Next, I'm going to continue with the Uniclo Sdn Bhd cash budget for the year ended 31st December 2025 show the company's ability to manage its cash effectively. The collection in quarter of sales for dress shirt revenue is based on 80% of first and second quarter dress shirt sales, while 100% of dress shirt sales in all other quarters. The collection in quarter after sales is based on 20% of previous quarter dress shirt sales for second and third quarters. For the jumpsuit, the collection in quarter of sales is based on 75% of first quarter sales, while 100% of jumpsuit sales in all other quarters. While for the other sales is based on 35% of first quarter jumpsuit sales. And lastly, for the cardigan, the collection in quarter of sales is based on 70% of first to fourth quarters cardigan sales. For after sales is based on 30% of previous quarter cardigan sales for second to fourth quarters. The cash received mainly come from sales of dress shirt, jumpsuit, and cardigan, along with capital contribution of 20,000 ringgit, resulting in total cash received of 1,024,860 ringgit for the year. For cash disbursement include direct material purchase, direct labor, production overhead, selling general and administrative expenses, and office equipment amounting to total cash outflow of 909,345 ringgit and 40 cents. Next, for cash budget, although the company experienced a cash deficit in the first quarter, this is managed through short-term borrowing with interest charged at 3% per quarter. In the following quarters, cash inflow exceeds outflow, allowing the company to repay the loan and maintain a minimum cash balance at 25,000 ringgit. By the end of the year, Uniclo Sdn Bhd record a healthy ending cash balance of 113,343 ringgit and 44 cents, indicating sound cash flow planning and financial stability. For the budgeted financial statement of Uniclo Sdn Bhd for the year ended 31st December 2025, first the schedule of cost of goods manufactured and sold shows that after accounting for direct material, direct labor, and production overhead, the company produced goods costing 747,957 ringgit and 60 cents. And after adjusting for inventories, the cost of goods sold amounted 731,769 ringgit and 84 cents. There is no ending work in process inventory due to the company's production is short enough. Moving to the budgeted income statement, total sales revenue is 1,031,860 ringgit, resulting in a gross margin of 300,090 ringgit and 16 cents. And after deducting operating expenses and interest, the company achieved a net income of 124,843 ringgit and 20 cents. The budgeted cash flow statement shows positive cash flow from operation of 118,334 ringgit and 43 cents, a cash outflow of 5,000 ringgit for investing and loan repayment under financing activities, leading to an ending cash balance of 113,343 ringgit and 44 cents. Finally, the budgeted balance sheet reports total asset of 184,509 ringgit and 20 cents, made up of 164,509 ringgit and 20 cents in current asset and 20,000 ringgit in fixed assets, while total liabilities and owner's equity also balance at 184,509 ringgit and 20 cents, reflecting the company's stable financial position.
I will present analysis of master budget. First, Uniclo positioned itself as a medium-price, quality-oriented clothing manufacturer. Rather than competing on lower price, Uniclo prioritized producing high-quality garments to secure a strong market position. This approach is evident in its labor cost structure, particularly for cardigans. Specifically, cardigans production demands skilled labor and more time, with each unit require 1.5 hours to produce. As a result, Uniclo incurred a higher direct labor cost of RM12 ringgit per hour for cardigans outputs. Hence, the company can target customers who value complex and high-quality clothing. Next, Uniclo master budget faced multiple uncertainty posing financial risks. As a new business starting operation in 2025, the company lacked historical financial data. Consequently, the sales forecast depends on expert judgment rather than past trend. Furthermore, the budget presumes steady raw material price such as cardigan fabrics at RM13 per meter, but actually material costs may have fluctuated due to global textile price shift or supply chain interruption, which could impact profitability. Finally, some indirect costs like buttons and thread are estimated as a fixed percentage of direct material costs, which may not capture real usage if material price rise and risking budget accuracy. Moving to target market, Uniclo target working professional and fashion occasions young adult. Its products suit both casual and formal occasions. Dress shirt primarily target professional and are expected to ensure stable revenue. Meanwhile, young adults are willing to pay premium price for high-quality items, such as cardigans requiring expert craftsmanship. To execute this strategy, Uniqlo hires skilled workers and pay a competitive wages to uphold quality. Regarding industry risk, seasonality significantly affects clothing sales. Uniqlo anticipates peak sales in the fourth quarter due to year-end clearance events and New Year preparation. However, certain items such as jumpsuits are predicted to underperform in the third quarter due to the absence of major festivals. Moreover, Malaysia's removal of the sales subsidies in 2025 is also likely to raise fuel and transportation costs, potentially straining Uniqlo's supply chain. Finally, beside this strategy, Uniclo faced financial risk. Based on the projected cash budget, the company expected a negative cash balance in the first quarter, which could disrupt operation and require external financing. This shortfall will force borrowing of a loan at a 12% interest rate, thereby increasing financial strain early on. Furthermore, at fourth quarter clearance sales may erode profit margin and higher volume may not fulfill counterbalance lower selling price, exposing the company to potential underperformance in profitability.
Hello everyone, I'm Yi Lin. I'm going to explain the activity-based costing system used by our company and justify the key assumption and cost driver applied. The company used activity-based costing because it produced multiple product lines like dress shirt, jumpsuit, and cardigans, which differ significantly in design complexity and production process. The total manufacturing overhead budget is 233,977 and 60 cents, and this overhead is fully assigned to 8 activity cost pool, which is product planning, purchasing, cutting, machine setup, sewing and finishing, quality assurance, packaging, and warehouse handling. Each activity consumes overhead resources such as salaries, utility, depreciation, equipment rent, and building rent. These overhead costs are assigned to activities based on how the resources are actually used, ensuring a cause and effect relationship. Direct materials and direct labor are excluded as ABC costing focus only on manufacturing overhead. Starting with product planning, a total of 48,000 from manager salary is allocated to this activity. This is reasonable because managerial effort is mainly consumed by planning and coordinating different product designs. Product planning is a product level activity, so planning hours are used as the cost driver. More complex products such as cardigans require more planning hours than dress shirts. Purchasing costs include overhead such as some indirect material costs and a portion of van depreciation used to collect raw materials. These costs are allocated using the number of purchase order, a batch level cost driver, as each order requires similar efforts regardless of order size. Product with greater material variety therefore consume more purchasing activity. Cutting is a unit level activity performed manually. The main overhead consumed by cutting is utilities, such as electricity for lighting and workspace usage. Cutting is performed by direct labor and therefore does not consume labor-related overhead. Cutting hours are used as the cost driver as cutting is performed on every unit produced. Sewing and finishing is also a unit level activity. Overheads such as indirect materials, utilities, and equipment costs are allocated using sewing hour. More complex products like cardigans consume more sewing time per unit than simple products like dress shirt. Machine setup, packaging, and warehouse handling are treated as batch level activities. Their overhead costs such as sewing machine oil, indirect labor, utilities, depreciation, and building rent are driven by setup runs, shipment, and batches handled, rather than the number of units produced. Storage-related building rent is allocated to warehouse handling as storage requires dedicated long-term space. Finally, quality assurance focuses on inspection and quality control. The primary overhead is supervisor salary as inspection is the supervisor's main responsibility. Inspection hours are used as the cost driver because more complex products require more frequent and detailed inspection. As a result of applying activity-based costing, the product cost per unit differs significantly across product lines. Dress shirts have the lowest cost per unit, while cardigans have the highest, reflecting their greater consumption of overhead activity. This demonstrates that ABC costing provides a more accurate and meaningful allocation of overhead compared to traditional costing methods. In conclusion, the ABC costing system appropriately captures the cost and effect relation between overhead resources and activities, making the cost information more reliable for pricing and managerial decision making.
And that is all from us. Thank you for watching our presentation.